Our next session explores private sector-led growth in EMEs, the role of the state. This panel will examine how industrial policies and deregulation are shifting the investment landscape, as well as private sector participation, and specifically how AI and technological innovation are driving productivity and how they are reshaping policy tools. Please join me in welcoming to the stage our panelists. His Excellency, the Minister of Finance and Budget, Republic of Senegal, Mr. Sheikh Diba. His Excellency, the Chairman of Islamic Development Bank Group, Dr. Mohammed Al Jasser. And the Managing Director of Operations at the World Bank, Ms. Anna Berde. This session will be moderated by Mr. Jihad Azrour, Director of the Middle East and Central Asia Department at the IMF.
Good morning, everyone. Good morning. Welcome to this session on the private sector-led growth in emerging economies. What is the role of the state? I have the pleasure to moderate this session with such distinguished group of panelists. As we saw yesterday and today, we were assured that the global economy has been resilient, and this is despite the series of major shocks and also the high level of uncertainty. Also, when we look forward, everybody converged that the medium-term growth is lacking potential and steam. This raises certain number of questions and challenges for policymakers. And the most important one is how to reignite growth in a constrained global environment and in highly uncertain geopolitical and geoeconomic situation. To kickstart our discussion this morning, let me share with you 4 key facts. The first one is the fact that the medium-term growth and productivity have been disappointing in the emerging economies, and this since the global financial crisis. Growth slowdown is not confined in one region, and it has affected also advanced economies, emerging economies, and low-income countries. And this since the global financial crisis. But what I think is important to highlight, as we see in the graph, that in the post-pandemic era, productivity has become much weaker as an engine of growth. And the question is where this comes from and what is the role of investment and private sector. The good news is if we look at the last 25 years, we see that the private sector is growing in terms of investment and becoming the largest driver of investment internationally. Yet, recently, and this after the COVID crisis, we see that private investment has lost steam and projected to remain below the trend that we saw over the last 25 years. The third fact is the role of the state. As we see, the state has stepped up, and recently many governments turned to industrial policies to support competitiveness and resilience. However, industrial policies could be fiscally costly and may create distortions and also may create some challenges in a time where fiscal space is limited. The fourth fact is what could be a game changer. AI is the recent major transformation. It may boost productivity and growth, but how about job opportunities? This is a new force at play, that could reshape the outlook of growth structurally over the next decades. AI and rapid technological change are shaping up our future. AI offers potential to boost productivity and address some of the issues that we saw in the previous slides, where it's not only labor productivity that has dropped, TPF also has dropped over the last 10 years. But the question is, what is the impact is going to be on jobs? Because this graph is showing that in countries or in industries where non-AI skills are needed, employment has gone up. Therefore, definitely AI is going to change our economic landscape. It has a potential to increase productivity, but how about impact on labor market? Our discussion will revolve around 4 questions. How should we strike the right balance between the state and the private sector in this new environment? The second question is, how can emerging markets and development economy harness AI to lift productivity, promote private investment, while also supporting job creations and inclusion, especially in countries where the level of unemployment at the youth level is relatively high? Our third issue that we will explore in this session is, how does AI expand the frontier of what is possible and how emerging economies can benefit from that? And the last and the also important one is risks. What are the new risks that policies need to manage in the next 5 to 10 years? To discuss these issues, we are fortunate to have an outstanding panel of speakers. First, Anna Bierde. I'm very pleased to welcome you, Anna, here. Anna Bierde is a Managing Director of Operations at the World Bank. Anna spearheads the World Bank work on most pressing development challenges, overseeing a portfolio worth of north of $350 billion in program across different countries. We are grateful to have you with us to share the World Bank experience and insights on these issues today. Second, I'm delighted also to welcome His Excellency Dr. Mohammed Al-Jasser, Chairman of the Islamic Development Bank. Dr. Al-Jasser brings a deep experience at the intersection of development finance, macroeconomic policy, and financial sector reforms. As you know, he previously served as Saudi Arabia Minister of Economy and Planning, and also as Governor of the Central Bank of Saudi, and he was also Executive Director at the IMF. Third speaker is His Excellency Minister Sheikh Diba, Minister of Finance and Budget of Senegal. Minister Diba, welcome. Minister Diba had a deep experience in public finance and fiscal policy. Prior to his job as minister, he served as a Director of Budget and also advisor to the Minister of Finance. Bienvenue, Monsieur le Ministre. And I would like to start with you. You noted recently that the most pressing challenge, and I quote you, but also the biggest opportunity lies in job creation. With over 1 billion people expected to enter the labor force in the next decade in emerging economies and developing countries, meeting these challenges will require more vibrant private sector, something that we have discussed in the previous sessions and yesterday, and this requires to be supported by reforms. How, from where you sit and the interaction you have, how do you see the roles of the state and the private sector? And what should be the dynamic over the coming decade in order to achieve higher level of growth, but also providing more space to the private sector?
Yeah. Thank you so very much, Jihad, and great to be here this afternoon. So you mentioned the number. We estimate that over the next decade, there will be a demand for about 1.2 billion jobs across the developing and emerging economies in the world. And we don't anticipate at today's rate that there will be a supply of jobs more than potentially a quarter of that. And we also know a fact, which is that 90% of job creation comes from the private sector. So clearly, we need to understand what is the role of the public sector, what is the role of government. I think Minister of Finance, Minister Al-Jadan, said it nicely in this morning's panel, which is that government cannot be in business. And that's exactly what we see. The government needs to be an enabler, needs to create the conditions so that the private sector can create the jobs that it needs to create. We see three priorities here. The first priority is to invest in foundations, in fundamentals. And if you just think about it, and I just came from both Nigeria and Angola, and I meet with the private sector all the time, and I ask them, what are some of your most pressing constraints? And the top three of the number one issue that is raised is electricity. Either not enough electricity or not affordable cost of electricity to the point where they can be competitive. So one of the fundamentals is to invest in infrastructure, and here we see a big need in electricity, affordable, reliable electricity, but also transport and logistics and digital and so forth. The other fundamental part of investment that we see is actually in human capital, because firms also can't be established, can't operate, can't thrive if there's not skills. So the first one is invest in the fundamentals. The second is to get the rules clear and to also stick to them. So here again, the lack of clarity sometimes in the enabling environment. What are the rules? What are the regulations? How is land administered? What are some of the establishment and the rules for setting up a company are not very clear. And our second message, therefore, is that make the rules very, very clear. And then the third one is mobilize private capital at scale. And this actually ties into the investment in the fundamentals, because the state cannot meet all the investment needs in those areas that I mentioned. But here we need, again, predictability for the private sector. We hear over and over again that one of the most difficult things is to operate in developing and emerging markets if there's volatility, let's say in tariff policy, in monetary policy. So getting those rules very clear and established and communicated, and then making sure that the private sector feels there is that enabling environment to come into. So the other thing that we are noting very carefully is that in countries with the youngest populations, they're actually lacking some of the clarity exactly in these rules and regulations, or no regulations. And I wanted to emphasize, when we say make the rules clear, we don't see that the business environment doesn't need any rules. In fact, it needs regulations, but it needs to be predictable. Jihad, one thing we have done is, in addition to those three priorities, is to identify sectors that we think are very conducive for job creation. And these are sectors that we think are labor intensive and that will continue to rely on young people, and it also offers a wide spread of educations and skills. The first one is indeed infrastructure. The second one that we look at, and this is an important sector across many, many parts of the world, is agriculture, but turning agriculture into a business, so really agribusiness, and making sure you create platforms where smallhold farmers can aggregate into cooperatives and access value chains. The other one is healthcare. Why healthcare? Because you need a healthy population, but we also believe the care industry is a big sector that can create jobs. The fourth one is tourism. Tourism is a great way for countries to provide an increase in the amount of services that they offer, but it's also an area where a lot of young people can come in and have upward mobility. And the fifth one is value-added manufacturing, and this is the type of manufacturing that really is much more localized and that creates jobs in the local market. And my final point will be the fundamentals of stable macro. I think we talked a lot about it yesterday, but stable macroeconomic performance is really the foundation for all of it.
Anna, thank you very much. I would like to ask you a follow-up question.
Sure.
You have mentioned certain number of key enablers: access to finance, access to talent, access to infrastructure, access to market, and also some of the verticals that could create jobs, and also the underlying macroeconomic stability. Government has limited capacity, especially in emerging economies, and they need to prioritize. What are your views on that? How government should prioritize their actions, and where to put the emphasis, and maybe where they should be refraining from doing?
Yeah. So when I mentioned that 90% of jobs are created by the private sector, a very, very big engine here are small, medium-sized enterprises. So we often see that the new jobs really come from firms when they grow. So if you have a very small enterprise, you have to say what is preventing it from growing and becoming a bigger enterprise. If you become medium-sized enterprise, how do you become even larger than that? Because that's when jobs are created. So I would focus on SME and SME policies and SME strategies, and that's something our organization within the World Bank Group, IFC, is working very, very hard on now under its IFC 2030 vision. And then the other thing I would focus on is making sure regulatory bodies, again, have very clear regulatory rules for business environment, and to make sure that governments monitor constantly whether or not they're improving on the speed of doing business and the speed at which firms can be established. And then these important fundamentals. I think we've seen a decline in investment in infrastructure over the years, and that is something that we now need to recover. And that's hard to do when there's fiscal pressures, but that's also why the public and private has to come in and do its own roles.
Thank you very much. In the second round of questions, I will come back to the how AI can help, including on improving business environment and improving the doing business. Chairman Al-Jasser, let me, with you, address a complementary or another facet of what we are discussing now, which is how we can remove the impediments from the private sector. We discussed with Anna about the enablers, but also I would like to, with you, address the issue of obstacles. From where you sit at the Islamic Development Bank and the support that you provide to the private sector, what are the main obstacles you see in terms of creating and growing private firms, and how we can incubate and grow a dynamic and competitive private sector?
Thank you very much for this opportunity and this timely discussion. I think from where Anna ended, the role of government and the private sector are very, very important, to the point where they could either help each other or they could harm each other. I hear a lot about deregulation. But if one chooses a market economy, then what is needed is decontrol. So if you were, let's say, in Central Asia, there was a planned economy and all of this, the first thing you need to do is to really decontrol the economy from state control and management. But moving into a market economy means also that you need regulations. Markets need to be regulated. You need speed limits. You need all of these things that go with market. So what we have in the relationship, what we see from our perspective, is that there is a recognition of the need for small, medium, micro enterprises as a great source of jobs and production. But at the same time, we can see that the resources are not easy to come by. I mean, for example, there was a study that in the Arab world, there was 90% of enterprises are really private. But at the same time, they only get a trickle of the capital. So capital shortage, de-risking capital coming into these economies will be very important for the private sector to take advantage of the opportunities that we have in the country. So finance, from our perspective, is a big issue, but using and utilizing that finance in the right way is even more important. So the underinvestment that we see in the private sector, particularly in the small to medium scale industries, is really related to the level of uncertainty that they face going into the market. There are a lot of small, medium-scale investors that want to get into the market, or probably they do enter the market. But once they enter, there are obstacles galore. Some of them structural, some of them are political, some of them are bureaucratic, all kinds of things. And this sends the wrong signal to the next person who's going to come into the market to start a business of their own. So we have even changed some of our operations, especially those that we do with the World Bank, in terms of emphasizing agriculture. Agriculture proved to be a great source of employment, a great source of food, and a great source of keeping people on the land. So they don't have to go and cross the Sahara and cross the Mediterranean, not knowing if they're going to come back or not. So we have the agro-industrial processing zones that we have jointly gotten into. Actually, the agropole in the Senegal and in Nigeria we have. Those we have found that including the private sector can really thrive in them because they get the whole value chain. But more importantly, the corporate governance that the World Bank, the Islamic Development Bank, and the governments of those countries are doing is really to ensure that there is a very proactive corporate governance and transparency operations that ensure that these enterprises will thrive and will provide the necessary thing. Finally, I will just say that the service sector is probably the most important going forward. And a lot of them are small and medium-scale industries also. So we in the Islamic Development Bank, with our affiliates also, we go into these areas and provide lines of finance for some of these industries in order to get them moving in that direction. But all of the success is dependent on unshackling those enterprises from interference from state agents, and at the same time ensuring that they have reasonable amount of access to capital, because that is one of the issues that we have faced, and we are working now to alleviate to a large extent.
Thank you very much for highlighting the fact that it's not about more or less regulations, but about the right regulations. And when the regulations are right, they produce the right results. Can I ask you to clarify a bit more from an institutional standpoint? You mentioned, I think both of you mentioned an important point. Is access to finance is not only access to debt. You need more capital. You need more to help companies grow. How your institutions are also catering for this. I know that both institutions provide a lot of support for sectors, for enablers, but are there any specific ideas going forward on providing more support for the equity portion of finance rather than the debt? You can, both of you, take this question.
I can start and tell you, for example, we have our affiliates, ITFC, ICD, and ISEC. Those deal directly with the private sector and provide de-risked capital. If you take ISEC, let's say, they provide insurance. It's like MEGA at the World Bank. They provide insurance for trade and for investment. If you take our ITFC, we provide financing for trade. A lot of countries, especially developing and sometimes least developed countries, they need financing for just to import fuel, just to import seeds. So these affiliates of the Islamic Development Bank are there to help, and often you will find the affiliate with the main bank working together to help one member country overcome those obstacles. So yes, the de-risking of capital and providing that capital at the right time for the right enterprises make a whole difference in terms of the probability of success.
Thank you. Anna, do you would like to add anything on this?
It's a great point, and we, of course, International Finance Corporation does both debt and equity, and under its new vision, new strategy, we envisage a big increase in equity as part of its work. But we also are increasing our availability of providing finance in local currency, which makes a huge difference to local firms, and that's another very important point. And then, of course, we have, under our Multilateral Investment Guarantee Agency, stepped up a lot on guarantees, whether it's political risk insurance or guarantees that enable the off-takers to be guaranteed, so that firms are guaranteed so that off-takers meet their obligations. So we have a whole slew of guarantee instruments which are also very helpful. But I wanted to just, if I may, Jihad, come back on something important Dr. El-Jasser said, and with an example that I found very interesting. He talked about countries that are heavily dominated by state enterprises and how they need to sort of let go to make room for the private sector. So a little while back, I was traveling and I met with an investor who had established in a country which was very heavily dominated by state-owned enterprises. And this investor is in fintech. And I said, why did you come to this part of the world? And he told me, because there's two things here that are really important, which is quite good connectivity and broadband, which I need, and people tend to have bank accounts. So the banking sector works really well. And then he went on to describe how in a couple of years he had 20 million customers and he was expanding and he was going to neighboring countries. And I said, this is incredible in just a couple of years, because it's not like ease of doing business, they were top of the list either. And then I said, so which was really the major benefit or the major criteria that made you so successful? And then he said, and this I think is incredibly telling, there's no incumbent SOE. There's basically greenfield for me, because there was no state-owned enterprise that I had to go up against that just I knew would be impossible. So I was in a greenfield area. So it calls for, let's look for those opportunities where you don't have to go up against an SOE, but let's not stop there. Let's make sure they do what Dr. El-Jasser said, which is make the level playing field by doing the restructuring that needs to be done.
Thank you. We are going to guess which country you are talking about.
You can guess.
Monsieur le ministre, bienvenue. Vous représentez un continent jeune qui a beaucoup de potentiel, et vous avez récemment déclaré l'année dernière de la conférence sur le forum de financement à Dakar, vous avez déclaré que le continent est confronté à d'importants défis pour mobiliser des financements en faveur du développement. Et vous avez dit que le déficit annuel de financement des infrastructures atteint 100 milliards de dollars en Afrique. Et que les PME et PMI, qui représentent 90% de l'économie, sont confrontés à des pénuries pour l'accès au crédit. Dans ce contexte, comment les gouvernements, et en particulier ceux qui ont une marge de manœuvre limitée au niveau budgétaire, comment ils peuvent faire pour aider le secteur privé à se développer, et comment, vous avez deux représentants de la communauté financière internationale, quelles sont les innovations que les institutions peuvent développer afin d'aider un pays, un continent qui a un potentiel énorme, reconnu, à réaliser ce potentiel.
Je vous remercie, monsieur le modérateur. Alors, vous me permettez, comme c'est la première fois que je prends la parole depuis le lancement de cet événement, de profiter de l'occasion pour féliciter et remercier les organisateurs de cette conférence, le ministère des Finances du Royaume des Arabes Unis, de l'Arabie Saoudite, le Fonds monétaire international pour cette belle organisation. Ce que je voudrais dire, pour revenir effectivement à cette question, c'est que nous sommes dans un contexte assez particulier, nous en Afrique, comme vous l'avez dit particulièrement, sur le volume de jeunes par rapport à la population totale, mais aussi sur la situation des finances publiques de la plupart des pays qui composent un peu cette zone-là. Et pour poser le contexte, il faut revenir sur les éléments qui ont amené à cette situation que vous venez de décrire. Nous sommes un continent qui est presque un désert infrastructurel. Il y a beaucoup de choses à faire sur des domaines très très importants, des domaines socio-économiques de base. Il faut investir dans les universités, il faut investir dans les hôpitaux, dans les routes, dans les plateformes industrielles, mais dans les dépenses essentielles qui doivent soutenir véritablement le développement de nos pays. Cela nécessite des volumes de financement très très importants. Et pour le cas du Sénégal, de 2012 à 2022, l'État a mis en place justement un plan de développement pour apporter des réponses à ces problématiques infrastructurelles. La conséquence, c'est que nous avons investi en termes de dépenses publiques beaucoup de ressources. Ces ressources nous ont permis justement de réduire le gap infrastructurel qui nous sépare des pays développés, mais en même temps, cela a occasionné un accroissement de l'endettement public. Et ce faisant, les infrastructures dans lesquelles nous avons investi, où l'efficacité de l'investissement n'a pas été suffisamment à la hauteur pour nous permettre de créer substantiellement de la croissance, pour nous permettre de créer de l'emploi, mais aussi pour nous permettre d'élargir l'assiette d'imposition, l'assiette fiscale. À partir de ce moment, se pose véritablement la problématique de l'efficacité de l'investissement public. Or, les besoins sont encore là, il faut les satisfaire. Comment les satisfaire étant dans une situation d'endettement plus ou moins difficile, où nous avons atteint presque des seuils critiques, où nous sommes amenés à procéder à une consolidation budgétaire, à un ajustement qui ne compromet pas justement l'investissement dans ces secteurs importants. C'est à ce niveau-là que se pose toute la pertinence de votre questionnement. C'est justement, il faut que l'État continue de faire son travail, il faut que l'État continue d'investir dans les secteurs sociaux de base, mais il faut que l'État surveille son niveau d'endettement, parce qu'il y a des enjeux qui sont derrière. Or, il y a des acteurs qui sont sur la place publique, qui sont dans l'espace géographique de nos États et qui doivent jouer un rôle, c'est le secteur privé. Le défi maintenant pour les pays africains, pour les pays en développement de manière générale, c'est comment opérer la transition de façon à permettre à ce que l'État continue de faire son travail, mais en décélérant l'investissement public pour céder la place au secteur privé, alors que ce secteur privé-là n'est pas encore à des niveaux de développement, à des niveaux d'importance suffisamment, en tout cas préparés pour pouvoir jouer ce rôle. C'est maintenant à ce niveau-là qu'il y a un certain nombre de défis et de challenges à opérer. Et c'est pourquoi, dans le cadre du Sénégal, nous avons mis en place ce que nous avons appelé l'agenda national de transformation Vision 2050, où nous accordons au secteur privé un rôle central devant lui permettre de se suppléer à l'État, plus ou moins à moyen et long terme, et d'investir dans des secteurs marchands, parce que dans nos pays, l'État est obligé d'investir dans des secteurs marchands, faute de présence de secteur privé suffisamment fort pour pouvoir le faire. Alors, il faut y aller. L'agenda national de transformation prévoit ceci. Dans l'intervalle, d'ici la période de 10 années, il faut que nous arrivions à permettre au secteur privé d'occuper les 1/3 des besoins de financement. L'État se met dans 1/3 et le tiers restant, que l'État trouve les voies et moyens pour pouvoir intéresser le secteur privé et en mix, en juin 28, que nous puissions ensemble essayer d'apporter des réponses à ces préoccupations d'investissement. Donc c'est toute la pertinence du développement des partenariats publics-privés. Mais je disais tout à l'heure que l'un des défis, c'est que nous avons un secteur privé qui n'est pas tout à fait puissant, tout à fait grand pour pouvoir jouer ce rôle-là. Il nous faut réformer. Et les réformes touchent des secteurs très importants. C'est d'abord de créer un environnement suffisamment incitatif pour intéresser le secteur privé à venir investir. Le Sénégal, tout récemment, et c'est la plupart des pays dans la même situation, mettent en place des codes des investissements. Le code des investissements, c'est des lois que nous mettons en place souvent pour voir quels sont les principaux glos d'étranglement à l'investissement privé et comment définir un environnement suffisamment attractif pour permettre à ces gens-là de venir. En 2004, nous avions mis en place un code des investissements. 20 ans après, nous nous sommes rendus compte qu'il ne répond plus aux exigences du moment et nous l'avons réformé en 2025, l'idée étant de cibler les avantages, de rationaliser les dépenses publiques. Ici, dépenses publiques s'entend exonération. Ce n'est pas dépenses fiscales plutôt, s'entend exonération.